Good morning, traders, and welcome to BCI's morning market analysis. First up, let's talk about the US dollar. The DXY is to around 99.5, a 1 week low, as optimism over a potential Middle East de escalation weighed on the safe haven demand. Trump also signaled that the US military action could end within 2 to 3 weeks, though some caution remains with troop deployments ongoing and the Strait of Hormuz still largely closed. Despite recent volatility, the dollar remains supported by strong yields and a cautious Fed. Inflation concerns from rising oil prices could keep the Fed on hold for longer. Technically, after falling below 100, downside could extend towards 99.08 and the psychological level of 99, with resistance at 100 and 100.64. Next up, let's have a look at crude oil. WTI fell over 2.5%, slipping below $98 after a strong March rally as easing tension hopes pressured prices. Risks still remain elevated with continued military developments and fresh attacks on energy infrastructure in the Middle East, including drone strikes in Kuwait. API data showed a sharp 10.26 million barrel inventory build, adding further pressure. Still declining US shale output is tightening the broader supply buffer. Oil remains in a high level consolidation range with resistance near 100 to 103.4 and support seen around 92.43 to the psychological level of 94. Momentum has weakened, but no clear reversal signal is yet to be seen. Next up, let's have a look at gold. Spot gold rebounded towards 47.60, supported by easing rate hike expectations as oil prices softened. Gains still remain limited due to reduced safe haven demand and a stronger US dollar and elevated US bond yields. After a steep March sell-off, the broader bias still remains bearish. Recent price action does suggest a weak rebound with signs of a potential dead cat bounce. Resistance stands at $4,800 to around $4,880, while downside risk could see a move back towards 46.15 and potentially the psychological level of $4,600. Next up, let's have a look at the Australian dollar. The Australian dollar rose to around 69.40, recovering from recent lows on improved risk sentiment. Hopes of de-escalation supported the moves, though uncertainty around the Strait of Hormuz and rising energy costs remain a big concern. The RBA's firm stance and strong fundamentals continue to support the currency, with markets pricing a 65% chance of another rate hike in May. Technically, the pair holds above 69 cents, maintaining a slight bullish bias. The momentum is weakening. Key support sits near 68.26 with resistance around 68.70. Well, that's all for today's morning market outlook. As always, manage your risk and happy trading.